And I gotta say, New York City cannot cook a gumbo or an etouffee like New Orleans or Louisiana can.
They absolutely cannot. But, you know, speaking of food, on a more serious note, a lot of people are worried about food prices and how much it costs to go to the grocery store. Consumers are still feeling the burn of inflation 4 years following the pandemic. While rates did drop significantly in the past 2 years, a new economic report shows that rates still haven't quite reached that benchmark experts were hoping for. I sat down with LSU economist Dr. Deck Terrell. Take a look. I just wanted to say thank you so much for joining us, and we appreciate your time.
Well, thank you for inviting me.
We're going to start with these questions. So in March, consumer prices came in at 0.4% over the previous month and 3.5% above March of last year. That's above economists' forecasts. So these numbers sound pretty scary. Does this mean that efforts to cut inflation have stalled?
So there are a few answers to that. One is that inflation peaked out at over 8%, so it really shouldn't be scary. However, what I would say is that it is a signal that inflation is going to be a little bit more sticky than we might have anticipated.
Correct.
Since COVID, if we had been at 2% inflation, most things would be up by about 8% over the prices in March 2020. Today, if you look at the prices of food, whether it be in-home or out at restaurants, they're up about 25%. So that means when someone goes to the grocery store or if they go to a restaurant, they're paying a lot more to eat. If you look at prices of used cars and trucks, they're up by even more than that.
And regular people can definitely feel that, especially here in Louisiana. You know, you're mentioning just everyday prices going up, but you know, this report also specified how housing and energy prices are largely to blame for higher inflation numbers. Both are already really big topics here in Louisiana. Is this report more bad news for people in our state specifically?
I think it's bad news for people who struggle month to month because in that CPI, it's a market basket of goods and services, is what we tell our students. For wealthy people, it's a big benefit that the price of television sets is going down. I mean, you can get a 75-inch television for much less than you would pay back pre-COVID. On the other hand, your rent is a lot more. Your gas is a lot more. Your food is a lot more. So I do think in a poor state like Louisiana, inflation is a bigger deal than it might be in a lot of wealthier states.
Something that you brought up was food and how food it costs more. And that's, in my experience, a lot of people base inflation off of what they're paying at the grocery store. Is it likely that we're going to see any of those prices come down even more, or are we kind of stuck with them?
Even if inflation goes down, you don't see prices go down. So inflation going down means the rate of growth in items goes down. So if I saw, now there are some exceptions. Eggs have gone down since their peak price.
And we all remember that. It was terrible.
Right. There was a terrible time as far as the price of some items. But the overall prices of food are higher than they were, and they're likely to continue to go up.
A new report says that, you know, a single person would need to make $96,000 a year. And a family of four, you know, that jumps to a combined income of $235,000 a year. I mean, is this true that this is the new standard to live comfortably here?
You have a lot of people in Louisiana that are earning very low incomes. I mean, consider someone who's earning not minimum wage of $7.25, but $10 an hour that they're advertising at McDonald's, or even $15 an hour. That's a very low annual income. And then you look at trying to pay rent, trying to buy food, particularly if you're a single mother and you're trying to support a child, one or more children on that, pay for a car, pay for car insurance. It's just almost impossible to do.
So in your opinion, as an economist that has been looking at the numbers, is it possible that we could see prices return to an area that we're all comfortable with, or an area that we're familiar with in the next few years?
I think it's possible that the inflation rate, if you ask me what I would predict, I think it's very reasonable to think that the inflation rate may settle around 3% or a bit over 3%. Now, that's not getting back to 2% price growth, but that's not as bad as 8 or 9%, which is the worst inflation we saw. That's really generated these really high prices that we're seeing right now.
So it's safe to say that the inflation conversation is going to stick with us Americans for a while now, but thank you so much for sitting down with us and talking through
You're welcome.
it. All right, thank you.